morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, September 12th. Stocks on Wall Street are picking up right where they left off last week, with heavy losses. The sell-off started when Jürgen Stark resigned his post as the European Central Bank's top economist on Friday, following disagreements about the ECB's purchases of Spanish and Italian debt. A meeting of the Group of Seven did nothing to boost investor sentiment over the weekend. The central bankers and finance ministers pledged to take, quote, all necessary actions to ensure the resilience of the banking systems and financial markets. But the G7 provided no concrete plan to address the concerns about weakening global growth or rising currency tensions. And now, those concerns are forcing politicians and policymakers to think about the next shoe to drop in the European sovereign debt crisis. According to multiple media reports, German officials are preparing for a potential Greek default, and Moody's Investors Service reportedly is considering downgrading the major French banks because of their exposure to Greek government debt.
Renewed fears about Europe's problems are having a major impact on the asset markets. Stocks across the continent are sharply lower, with the CAC 40 in Paris tumbling nearly 4.5%. Those losses follow steep declines in Asia. But the most dramatic moves may be taking place in the bond markets. The cost of protecting European bank and government debt against default jumped to its highest level in history. To put that in perspective, it now costs more than $500,000 to insure $10 million of Italian debt for 5 years. Meanwhile, the yield on the benchmark U.S. Treasury bond briefly hit a record low below 1.9% before rebounding. In the currency markets, the euro is also reversing some earlier declines against the U.S. dollar, but is still trading at a 10-year low against the Japanese yen. And we're seeing some losses in the commodity markets as well. Crude oil is now trading below $87 a barrel, while gold drops to around $1,840 an ounce, as some investors are forced to sell the precious metal to cover losses in equities.
On the corporate front, the Federal Reserve may be throwing up a roadblock to a potential blockbuster deal in the financial sector. According to the Wall Street Journal, the Fed is asking Capital One Financial questions about its proposed $9 billion purchase of ING Group's U.S. online banking business. Policymakers reportedly are concerned that the buyout would create a bank so large and complex that if it failed, it could jeopardize the entire financial system. Capital One is modestly lower on the news, while U.S.-listed shares of ING are tumbling nearly 7%. Those losses are representative of broad declines in the banking sector overall. Investors are concerned about the impact of the European sovereign debt crisis on U.S. financials. Bank of America, Citigroup, Wells Fargo, and J.P. Morgan Chase are all dropping about 1%.
On the positive side, shares of NetLogic Microsystems are soaring more than 50%. The semiconductor maker agreed to be bought out by Broadcom for $3.7 billion, or $50 a share. The price tag represents a 57% premium over NetLogic's closing price on Friday, and a 26% premium to its 6-month trading average. Shares of Broadcom are down nearly 3% on the news. And finally, as those two companies plan to combine, another business is breaking apart. Information services provider McGraw-Hill will become 2 separate publicly traded companies. The first will be called McGraw-Hill Markets and will include Standard & Poor's and J.D. Power, among other businesses. The other company will be focused on education services and digital learning. McGraw-Hill also announced plans to cut $1 billion from its budget and buy back $1 billion of its own stock. Right now, those shares are up about 3%. That's the latest from Weiss Research. Have a great trading day.